Probably,
That would help.
probably help.
Why don't you drag that a little bit there? That's it.
Oh, I need to change that.
So then we got that there. Should potentially be able to see our screw. Should potentially be able to see our screw.
No, don't want to be on this. That's just what people can see.
Okay.
Don't know. It's just I don't know if anyone's in here.
We've got one viewer.
Oh, okay. There it is. I can see it. Oh, look at the Wi-Fi thing.
Shocking. Can I try? How would you share? How would you share now?
Down there.
You click that and then
Share screen.
okay.
Right. Let's put on places that we're live. Give it a little bit for people now, but we'll give it a little bit until here we go. Someone said, thank you so much, Ryan. You add value into my trading career. Continue changing people's lives. Love you so much, guys. From South Africa. Respect.
Thank you, respect that.
4 people. There we go. Wi-Fi bar going up. Nine people. Right, we'll get into some videos in a bit. And if anyone's got any questions, we'll answer them throughout.
Are you recommending price action books?
I wouldn't know, like.
Yeah, specific books. Only thing we recommend is our course, really.
We might be bringing out a smaller course soon, like a little price action or just something. 13 people, but you know, the most the most experience you're ever going to get trading is on the charts itself. That's like the most value you're going to get. Is on the charts itself. Getting stuck in all of that. 14 people. There we go. Hey guys, hi guys, good vibes.
Good vibes.
Man, how do I get my head around this break and retest? Yes, Jason. What are you saying? I recognize the name. Yes, Callum. 16 people. Yes. What's good? All right, cool. We've got some heads in now. Yeah, we're gonna break some stuff down. We kind of planned a little something for today, but if we got time, what time is it? It's like 3 o'clock. So if we've got time and we don't waffle on too much, we'll answer some more questions. My new saying at the moment is, I'm saying it too much recently. We got, I'm starting to become consistent now. I'm just wondering how I could improve further. Yeah. Hi. Oh, cool.
Hi, Ryan.
Not me. See you.
Hello. Lawrence, how's things?
Cool. Let's get into it. I'm not going to say on this. Okay. I'll need to be able to come back to here. So screen 2. Beautiful. Right. So basically, me and Ryan are gonna take turns kind of just talking about different things, but what I'm gonna go through to start with is how you can understand who's in control of the market, whether it's buyers or sellers, and then really understand the bias of whether you should be looking for buyers or should be looking for sellers, and understanding who is the dominant driving force in the market, and you can use that. Sorry, you can determine that by looking at the phases of the market. Now, the phases of the market comes in two parts. It's either impulsive or it's corrective. And a lot of the time in the market, it's mainly correcting. Like if you look at the market, it spends a lot more time correcting than it does impulsing. And that's why you need to be patient in the market, because if a majority of the time the market's corrective, then a majority of the time you shouldn't really be in the market. But of course, it always comes down to what time frame you're trading on. So let's take a look at CAD CHF here. It's just in the past, looking at some market structure. And we're going from here and we're going to understand, well, who's actually in control of this market? Well, if we look on the left-hand side of the screen, we can see prices moving very impulsively to the upside. And then we pull back in a not very similar fashion of the way we've moved up. You can see it's very, very slow. And this whole market structure through here, if I just highlight it, is very corrective. There's no real direction. There's no real movement. There's nothing really to tell us who's in control from this moment on. And we do that pretty much all the way up until we come all the way back up here. So it's basically like we make this resistance level up here, we pull back, but then ever since here, we've just been correcting. We're not really seeing much movement within the market. And all price is doing is just coming back up correctively. It's correcting itself, so then sellers can step into the market at this level again. You can see here where sellers have previously stepped into the market, we can see they're coming back up to the exact same level, resistance to enter the market again, the same sellers. So what's happening is these sellers here are entering the market, and as they come down here, they're taking their profits. And then on the way back up, we're moving very correctively for then the same level for the same sellers to step into the market again. They're coming from the same area. And then we can see that prices impulsively, this movement here, impulsively move to the downside. If you notice the difference, so this move here is very strong. So that's sellers in the market. That's very, very strong movement, dominated by sellers, no buyers to be seen when driving the price to the downside. So that's what we want to identify here. We can see prices moving to the upside, and then not much is going on. And then here we can see that we move impulsively to the downside. So what's that telling us? That's telling us that sellers are in control of the market. And then what happens next is we see price correct. Oh, come on. We see price correct. So this whole movement here, price is just correcting. And what that's doing is the sellers who took their profits down here are just allowing price to now correct itself, so they can then get in at a much higher level from when they took their profit. So then, they can maximize on the whole move. These people here don't want to be holding one big position all the way down to this level down here. These people are selling, they're taking their profits, allowing price correct itself to then get in a much better price, so they can enter twice, max upside. So take a break in the market. There's not many sellers in the market. It's allowing some buying positions to now come in to provide liquidity for sellers to then regain control of the market again. Because remember, sellers can't enter the market unless there's buyers. Because for someone to be buying, there needs to be an opposite person selling. So that's what's happening here. So these sellers need these buyers to enter the market, because that creates buying positions for sellers to then flood the market again and drive the price down. So that's what happens. We get this impulsive move, we see a correction, and then we get a continuation. And that's basically the whole kind of foundation for our trading. It's impulse, correction, continuation. We allow for the impulsive move to happen, we wait for the correction, and then we catch the continuation. So the impulsive move gives us our bias, it gives us our sell bias. The correction allows us to find our positions, and then we look to continue to the downside. But let's continue. So what actually happens now? We see through here. So after we get this impulsive move to the downside, what then happens? We see this kind of structure here. Now, what a lot of people will see here is, okay, we've made a double top, we impulse, we see a correction, we impulse again. Okay, let's look for a break and retest. I know some of you are looking here. So I think it was Jason was saying, okay, well, What about break and retest? So this is where you need to be careful, because you want to be understanding the phases of the market. Now, we got an impulse move, we got a correction, then we saw another impulsive move here. A lot of people will be saying, okay, well, when we pull back to this level here, let's look to sell, but they're not understanding who's actually in control of this market. You can see this little mini structure down here. This is the correction. Sellers have entered the market, drove price down, and now they're slowly exiting their positions. They're slowly exiting their positions, but in a downside manner, rather than before, where we were correcting to the upside, allowing liquidity to build from buyers to provide the opportunity for sellers to enter the market. Now we have an impulsive move to the downside with a correction to the downside, providing liquidity and opportunities for buyers to enter the market. And that's what we see. We see this correction, and then we see this impulsive move here. And then what happens after that? We get break and retest over here. You can see structure, we correct, we impulse, we retest, and now we impulse the upside again. And then now we can say, okay, structure's clearly shifted. We can draw in potentially like a trend line here. We can say structure's clearly shifted. Buyers are now in the market. We've got impulsive moves to the upside. And then what happens? We're seeing bearish corrections. So buyers have stepped into the market. They're exiting their positions. Sellers are then stepping in to provide more opportunities and liquidity for buyers to then gain control of the market. And that's when the market moves bullish ever since, as we can see. So we'll draw our attention over to here now. Last one, just to talk about this. So this is how we can kind of, this is just basically the same thing. So this movement here is what? It's very impulsive to the upside. We're moving to the upside. And then what do we get? We get a much larger correction through here. We've got here something along those lines where we're impulsing and we're forming this. But why doesn't this continue to the upside? Well, for starters, if you are going to look to take a buy position here, it's not a bad thing because you're going with structure, all of that kind of thing. So it's not a bad thing if you do take a position here. This could just be one of those one-off times where, you know, it doesn't work, and that's fine because risk reward, all of that kind of stuff comes into play. You catch it on the times where it does work. So here, for example, let's say, okay, we impulse, we're correcting. This time it doesn't work, but then that doesn't mean, you know, you leave the market. You maybe revenge trade. You got to think tactically. What's actually happening? Why didn't price move higher? And here, for example, you can see we're correcting, but then what happens here? This is one big impulsive move from sellers, potentially just, you know, seeing price. I said, you know, seeing. Have I said it many times already? So you see price here step in from resistance and they drive price down. So now this is the impulsive move to the downside. Previously, this was the movement, you know, that tells us that buyers are in the market, and then price corrects. But then instead of looking for that upside movement, that potential that we were looking for, this time sellers have stepped into the market and drove price down. So now we can say sellers are involved in the market rather than going, oh, no, it's still going up. Let's revenge trade. Let's buy, blah, blah, blah. No, you can think logically. You can think, okay, sellers have stepped in. Now let's try and make something of this. So we have this bearish impulsive move. Now what happens? We see a correction here. Price is correcting to the upside, providing that opportunity and that liquidity for us to enter the market. And then, as you can see, the trend has changed. And then we see that downside movement. But yeah, that's what I was going to talk about for CAD CHF. If there's any questions on that, this is obviously a past example, just talking about market structure. But yeah, always important to understand who's in control by looking at the phases of the market, whether it's impulsive, corrective, and looking at the direction of the corrective structure as well. Okay. Let's read some of these.
100%. I think the last one was from Lawrence saying hello, Ryan.
So,
Scott, we had more. Yeah,
hi Ryan, hello guys. From South Africa, hello. Wish I was becoming consistent, feel like I'm going backwards. It happens, you know what I mean? Like, it takes, like, what's the word? Sometimes you've got to go backwards before going forwards, and it's all about being consistent. Eventually, you're going to get there.
One step back, two step forwards.
Yeah, one step back, two step forwards. I'm watching GBPUSD, looking, we're not going to talk about that. What is your opinion on today's? I'm going to talk about that.
You are lagging. That's nice. The Wi-Fi's.
Yeah, no, the Wi-Fi isn't the greatest at the moment. We're getting
data engineer to come around and sort that out.
Yeah, we're getting some new Wi-Fi.
Yes.
It will be recorded. I'll just post it on YouTube after. you see where you just showed that retest. What happens if price closed back in? Would this then be a sell trade?
I forgot what that is now.
I'm guessing it's like here.
That one, yeah.
Well, nah, because that's the thing with this. When you let's just do an example. So it's a valid point. When price is uptrending like this, and we see that price is uptrending, and we're pulling back a lot. So the main thing people will look for is a pullback into this most recent level here. So people will be looking for some kind of retest of this level, and then they'll be looking for that. But that's just textbook. That's what they obviously want you to think, and it's not going to happen every time. And in fact, it probably happens like one out of 99 times. No, 1 out of 100 times. That will happen perfectly. And it's not the case, because this is still an uptrend until this level is broken down here. This is the most recent. This is the higher high. This is the higher low. This is the higher high. And this is still a higher low up until that. That's a double bottom right there. So something like this is still valid. It's only when price breaks below this low that we're now downtrending, we can say, okay, structure's clearly shifting, and we start looking for the opposite. So you'll see a lot of people will be doing something like this, where they're looking for a break and retest of that, something like that, which is textbook. But you can allow, and the price does very often come down to these lower levels before going up, and sometimes a lot of the time it goes to do the double bottom. So don't just look for the break and retest. It can come down to as low as it wants, really, until it breaks below there. Then that's a complete shift in structure. We're still uptrending until we break that low. So yeah, that's basically that. Okay. Continue changing people's lives. Love you so much, man. Go on, Myra's. Greetings from Argentina. What's good? Amazing work. Thank you. From Malaysia. Hello. Will this recording be available? Yes. Thank you guys for the content. You're welcome. And is that to break the wicks or bodies? It doesn't. It's not that deep. It needs to. Do you know what I mean? It's not like wicks or bodies. What's a wick on the 4-hour time frame might be a body on the 1 hour. So it depends on the time frame. So you know, every time I say that now, I was going to increase.
No.
It doesn't matter. I mean, as long as you have something in place. So you're saying, and is that to break the wicks or the bodies? Well, for us, it'd have to be the wicks as well, because wicks is still price. Once it breaks through the wicks, then it's complete shift. If it's just the bodies, you know. Okay, now your turn, because I'm actually doing it.
No, you just need a strong candle close breaking before it become evident.
Yeah.
If you're too worried about that position, you need to just have just look at it. Price needs to break down fully. You need a strong break. It can't just be, we're at wicks. No, it don't really work like that. Strong break below. Yeah.
You don't really need to worry about whether it breaks above the wicks or the bodies, because we're not trading the breakouts.
Yeah.
Do you know what I mean? We need, whether it's breaking the wicks or the bodies, we're waiting for a big push. We're waiting for a big push above. Impulsive moves. So yeah, do you want to?
Do you guys check institutional signs? Yeah. It's my first live. It's quite scary. Here we go.
I thought it was going to be there.
I was about to say. Right, guys, so I'll be talking about market structure as well. Basically phases of the market, etc. And then, just what to look out for. Literally going on what Ant was saying, just following market structure and just looking out for these key impulses, corrections, etc. So if I draw your attention to this sort of price action here, we can actually see a pretty perfect head and shoulders pattern, where previously we were uptrending in the market, price was pushing up. And then, as you can see, we clearly made a left shoulder here. If I highlight it, left shoulder here. We then push up. Last final push gave us our head. And then what do we see? We then see price impulse away. Then correct. So let me draw that in actually. So if I'm boom, you can see where price impulsed up. Most people might potentially be looking for a break and retest of this level, like Ant was saying, and be looking to buy that. But how we pull back to that level, does that look corrective or does it look impulsive? It looks very impulsive in our eyes. So once again, they gave us that left shoulder there. Boom. We then pull back, impulsed away, expecting the correction back down if we are looking for a break and retest. But no, what we see another impulsive move, which means that gave us that quick up down movement that produced us our head. Now from here, what do we do? Impulse away, and at our right shoulder, how do we pull back? Well, it wasn't really impulsively. What do we see? We see price correct a bit, and then boom, what do we see? So we see a bearish impulsive move, a bullish correction, and then what do we see following from that? A bearish impulsive move to the downside. And then boom, what does that happen? Like you guys were saying, does it need to break bodies and wick? This move here is evident enough for us to say, yeah, this is a strong impulsive move breaking below structure. Therefore, our bias now shifted from that buy bias to now our sell bias, as we now seen this head and shoulders pattern play out. So a bit of mark structure there, boom, head, shoulder, boom. So now we're waiting for the break and retest of the neckline. And as you can see here, we did once come here, break, retest, very nice, correctively see these candlesticks here, very nice candlesticks, and then boom, what the CPC price were first on the break and retest of that. And these type of levels are fine, as we can see. We can start looking for trades in around this level with looking for Fibonacci's. You can see we come back tapping into the 50% and the 61.8 golden zone there. As you can see, a great trade. This would be a perfect example. But sometimes you're not always going to get a perfect sort of continuation in the market. Sometimes the market needs a bigger correction. And as you can see in this instance, it needed a big correction because it needed a big move to the downside. Sorry. Reason why I need a big move, big correction, big correction is because it needed to get that liquidity to move to the downside. Price isn't just going to go, oh yeah, have all the money in the world, go, go, go. It needs to stop people out. It needs to create liquidity in order to see that move to the downside. And this is exactly what happened here. We saw this big old correction here. And once that happened, what do we see again? We then see price impulsively move to the downside. We're getting pin bars of this level, and boom, we see price move to the downside. From that level, we can then start to draw in our outer trend line, as you can see here, 1-2 touch. And now I'm just going to draw your attention to this here. What can we see? Once again, we see price form another impulsive move from this area here. This is a strong impulsive move. As you can see, boom. What did price do then? Price then forms another bullish correction. And it happens again once again, like all the time. I can't lie. You see this area here of this low in the market. If I jump on the smaller time frames, it become more evident. I can just sit here anyway. We come and form a break and retest of these levels. Jump on a daily. See, the levels is very, very clear. We get a strong impulsive move, bullish correction, and then what do we see? We then see the market reverse one more time. But this is just phases of the market explaining impulse correction continuations. Now, this type of market structure here is what you want to draw your attention to. And also one more thing to add as well. If you guys are familiar with the Elliott wave theory, we can see that this is the first impulsive move. This was the second correction. This was the third impulsive move. This was the fourth wave, which is correction, and then the last one, fifth, final wave. So just knowing this type of detail and this type of facts, we understand that the market phase is over. This impulsive move is over, and that's potentially see the market reverse on us and actually change. And let me look down. Let me show you something on wave 5, which is very interesting and something for you guys to actually look at when trading and understand when the market is actually tied and finished. So let me jump back down on the daily. What do we see? So what do we see here? We see price impulsively move down, bullish correction. Bearish impulsive move. What do we see? We see a bearish correction. So a bearish impulsive move, bearish correction. And what do we see? We see a falling wedge. A squeeze pattern, as you can see here. So as we bearish impulsive move, what do we see? Price squeezing down, down, down. And what do we normally see? This is just allowing buyers to dip in the market because it's creating liquidity, etc., where people are still trying to sell this market, thinking that the trend's down. But you need to understand the phase of the market. What we're doing, we're correcting a falling wedge into this level. And then what do we see? Once again, a big, strong, bullish, impulsive candle breaking above this last high in the market here. And as you can see, strong bullish candle. Then what do we see? We then see a nice little break and retest of this level here. Boom. And then price continues up. So this is a perfect example of a correction pattern. You wait for the break, you wait for the pullback, retest, and then see that continuation to the upside. Now, as you can see, what do? We then come all the way up and retest our outer trend line. So you can still clearly see that price is still trying to move bearish as we came and retested that. And what do? We had that strong impulsive move away from it. But once again, what do we see? Loads of people will be thinking, yeah, rejected trend line, let's go down. What do we see? We see another, if I just highlight that in, see another rising wedge in around this level. And it's the clearest day. This is a strong impulsive move to the downside. And then what do we see? We see price bearishly correct. And what does it happen as well? It also comes back and retests our inner trend line here to perfection, a bit of continuation on it. And then boom, what do we see again? Another impulsive push to the upside. Now, this type of market structure is very, very ugly, but we can break it down and explain to you just the reason behind it, and actually chart patterns within chart patterns, which is a very, very nice thing to do as well. So losing a bit of track here. So yeah, boom. So the amount of people that be trying to sell this market right now, thinking that the trend is still going to continue bearish, but they haven't thought about their actual overall trend. The fifth wave is finally finished. The falling wedge is finished, and now we're moving impulsively to the upside. We then impulse down for the trend line, and now we're correcting, and then we impulse again. So it's just screaming at buyers want to step into this market. As you can see, what price is doing now is kind of forming this like flat-based triangle pattern. As you can see here, we're squeezing, but we can just acknowledge more chart patterns within chart patterns. So as you can see here, what do we see? So we see price form this horrible range of a market. As you can see here, all the way from July 20 to October 20, probably just after COVID, when news came out. And what do we see? We then see this counter trend line coming into here. And what else do we see? Another sort of rising, falling wedge into this sort of trend line level here. And boom, then we get impulsive move to the upside. Now, what do we see? We then see price do reject this level. But then what do we see here? We then see price impulsively move up to the upside. And what this candle does here, it leaves some sort of imbalance in the market where there was so much buyers in the market that no sellers were present at this time. And the market likes to be equal. So what it has done is came back to this level, probably about halfway between this candle, and then saw that push to the upside. What can we see here as well? So price impulsively moved to the upside, and now we're moving a bigger correction. I know we're in a bigger correction, but you need to bear in mind just what market structure is doing. If I delete everything on this chart right now and just showed you this, what does this look like? This looks like impulsive move, correction, and now we're going to see that continuation to the upside. And boom, what we form here? We form a beautiful double bottom in the market. Many people will be looking at this type of structure here and thinking that that's the break and retest there. Like Ant was saying previously, this is still the last low. So if that's the impulse move, that's came back and formed a higher low in the market. Therefore, that is the last low in the market. So until that is broken, there shouldn't be any really selling opportunities you want to be taking, unless obviously you're on a smaller time frame and you're looking to scalp it. But we're trying to more swing trade it. So as you can see here, price came back, formed this double bottom of this level, and then from there, it was just buys all the way back up to here. And yeah, that's just really breaking down market structure, isn't it? Talk about it forever, really. Bore you guys, but yeah, I hope that helped. Just breaking down phases in the market and what to look out for, just impulses, corrections, continuations, and that's really how the market moves. And obviously right now we formed this big impulsive move to the upside. And what we're doing now, we're forming this descending channel. As you can see here, price is from descending channel. So it's once again, it's a big impulsive move. We're now in a correction. What we're going to see, potentially price come back down here, maybe fill some of this candle where we left a big push to the upside where no sellers were present. Might come back down, tap into these levels here, and then boom, see that push to the upside. Or we might potentially want to come down and retest by area resistance. We might potentially might even come down all the way down here, and we might trap a lot of people trying to sell at this correction. We need to know. The only way we can find it out is looking at candlesticks at the time and looking at, are we impulsively moving down? Are we correcting? etc., etc. And that's something we can look at the smaller time frames in around these key daily levels at the trend lines, etc. So yeah, as you jump on this thing, yeah. You guys, okay, you guys, relax. To me,
No, I don't know.
Do you guys look for candlestick patterns, confirmations, and retests? Yeah, so that type of thing is something we break down extremely on for our premium group members. We look at for specific candles at specific places, and we can't give away too much because obviously that's our selling point. But if you do want to know about that more in depth, give us one of the DMs and we can sort you out.
I feel like I was going to do something on here. For some reason, it's like deleted all my watch list. That's something on there. So what's the one about? Big Davy. Okay.
Let's move out of the way.
Yeah, can do. I was just gonna basically I'm just gonna film some bits. Yeah. I'm gonna just carry on from what I was talking about. I don't know if there's any more questions, but I was basically just gonna carry on talking about what I was talking about the phases of the market, and what Ryan was talking about as well. Just touch up on that. So I'm going to talk about the phase of the market, looking at the impulsive moves, looking at the corrections, and looking at the continuations to kind of identify in this market what we can see as of right now to identify when buyers are stopping, when the momentum is running out, and when sellers are stepping into this market. So yeah, let's get into it. Okay, so what are we seeing here? Let's get rid of market structure up until this point. Just pretend you didn't see any of it. You're not going to be able to do that, but just pretend. So ever since from down here, what can we see price has done? We've seen price formed a double bottom. Ever since there, buyers galore. Buyers stepping in the market, left, right, and center, just continuing its way up. So a lot of buyers are flooding in the market down here and just continuing with price. And what we're seeing is just bullish impulsive moves followed by corrections, followed by bullish impulsive moves. And we're going to try and determine the reasons why and when this market is going to basically just, reverse on us. So yeah, we see this bullish impulsive move. And then after this, these buyers are taking profits here. Reason being is because the market is consolidating. So these buyers are nowhere to be seen. They're on the market to take a rest. The market is resting here. Then we get another bullish impulsive move here. Already, in my eyes, we're starting to see early signs that this bull run from buyers might begin to slow down. Reason being is because if you look at what just happened from this double bottom, you look at this big move, that's like 149 pip move. And then if we look at what happened next, we look at the move from here, it's double, it's like over half the move. So already the amount of buyers that are in here compared to here is doubled. This is doubled compared to where it was now. It's like half. So half the buyers are no longer interested in the market. So it should already be kind of giving us like some kind of red flags that, okay, right, we're moving bullish at the moment, but why is this momentum now slowing down? It's something to keep an eye on. It's not something to now go, okay, yeah, I'm going to start selling. It's just something to be wary of when you are considering buying positions. And then what happens after here, once we do get the next impulsive move, pretty much a perfect break and retest in previous highs. You can see through here where price impulse is. We then get a correction. Bearing in mind, this is a bearish correction because we are correcting downwards. The thing with corrections, I'm drawing in these trend lines and it's not right, but because it's a correction, it's so messy. It's just to kind of give you guys the visual idea of where price is correcting. You can see we impulse up and we're correcting down, and this is just allowing these buyers to then regain control of the market again at this resistance now being used as support. That's pretty much it. These sellers have been violated. We've broken up to the upside, and now it's being used as support. So again, what happens now? We get another bullish impulsive move. Let's have a look at. I feel like this is going to be pretty similar. 68, that one was, and this one is approximately the same kind of move. So we're basically moving with equal impulses now. But what's going on here? What is happening now is the market is very messy. We're actually kind of correcting to the upside. There's no real impulsive move. So I would class like this whole structure from here. We are retesting previous structure. So we have like corrected across here. But then what's going on up here? This whole market structure, say from here to here, it looks very different to what happened here and what happened down here. This is messy right now. You know, we're pushing up, we're coming back down. These candles are just very corrective in my eyes. There's not much on. We're not pushing up in one kind of driving force. So something's going on here. There's nothing now to kind of tell us to continue buying the market. But let's see what happens next. So we're correcting. Now what happens? Boom. We get a big impulsive move to the downside. Let's carry on. And what can we see? What's happening now? There's going to be a lot of people who would be looking at this market and thinking, okay, well, we've had this break and retest. We're just coming back down to here. We're just retesting support. There's buyers stepping into the market. So people are buying here, buying here, buying here because they think it's a break and retest, but they're not looking at the phases of the market and what's actually happened. Price has been correcting all through here, and then all of a sudden we get a wave of sellers in the market. So who's in control? Who's the most recent dominant market players? It's sellers. And then to kind of back that is the fact that we're now correcting. We're now correcting more so to the upside. This is a big move from sellers, and what are we doing now? We're just correcting. This whole move here is just providing these same sellers who jumped in here some like a second opportunity, some liquidity, some opportunities to enter a sell position again, and let's see what happens. Boom. They step in again. Driving force again. Whoa, what's going on? Okay. So now we can really see how the market structure has shifted. So boom, we have that. We impulse, we see a correction, and then again, notice how the market structure has now shifted. We're impulsing to the upside, we're correcting to the downside, but now we're impulsing to the downside and correcting to the upside. Notice how it's flipped. The market structure shift. We're making new lows. We're making new lower lows, lower highs. The whole sentiment of this chart is now shifted. So now we're seeing impulses, we're seeing corrections, and now the whole is basically bearish. So you want to be aiming and putting your focus on selling positions in this type of market. And then I believe it just continues with its downside movement.
Infinity and beyond.
Yeah. So that's basically it. It's trying not to kind of just fix your mind on one direction of the market and thinking, okay, yeah, it's uptrending, it's moving upwards. So let's look for buy positions. You need to be aware of like, well, what's actually, yes, we're moving upwards, but are we moving upwards with a lot of force, or are we moving upwards correctively like we are here? And then are we moving down with a lot of impulsive moves? And that's why this started to flip. Because a lot of people think, okay, we just pulled back and now we're going to buy from this level. But no, the way we approach this level isn't the same as how we like done here and we approach this level. It's different. So yeah, that's basically that. Whew. Ten people. I mean, we've been smashing it out for like 40 minutes.
Yeah, we've done well, man.
Can I stop?
Stop screen.
Boom. Right, guys. So, I mean, we smashed it out. What questions you got? Do you got one? So that's trade gold. What do you think the market is doing? We're not going to run through any kind of analysis like that. This is just a little bit of educational one, looking at how price is moving. Got some gold analysis in the premium group, I believe.
Yeah, we do. I love gold, so send it if you want to see it.
Yeah. Yeah, this recording will be on YouTube just for anyone to kind of rewatch. We've just released, well, we've not just like the start of the month, we've just released an algorithm. So if you guys want to get involved, put your money to work, trusted algorithm, it's been doing well. So
Yeah.
if you want to get involved, if you want to jump on the premium group, get involved in a team filled with other people in the same journey as you, that as well. We provide that. What else we got?
Course, educational content. We've got that as well. What else? We've got everything. 1-to-1. We can
hop on a 1-to-1.
1-to-1. You name it. Anything you want to do in this industry, we've got. So yeah, shout us. Sort you out. Make sure you go and share this with your mates and friends and tell them to watch it if they are interested in Forex, because I think today's call could help them a lot, and maybe just tighten up what they're maybe failing in the market, and this is understanding market phases and markets moving. So yeah.
But for now, guys, I mean, hope that helped. Drop us a message on Instagram if you ever need anything. Always here. But yeah, hope you found some value from that. Till next time.
See you later, guys. In a bit.